Hi, and welcome to the Market Alert for Wednesday, 26th of October 2022. So US stocks rose across the board as cyclicals outperformed, although futures dipped after Google and Microsoft reported. I don't know why the futures would drop, but there you go. We'd be selling the stocks, and they were released during... Oh no, it would have been released after the market closed, that's why. That's why the futures dipped. Dash out of cash as stocks, bonds and commodities spike higher. A lot of people getting back into the markets on the long side. Whether this is a good idea, I don't know. Short term, it may be. And people are increasingly anticipating something, and this is probably the reason why they're getting out of cash and going back into the market. The market is about to be shocked with a Treasury buyback operation twist. Well, we'll have to wait and see for that. I think November we got 0.75 of a basis point in rate hikes, but January is what I've said all along is where you would get any sort of tipping point. But Operation Twist, they're alluding to that they go back from QT or from QT to QE. And economic news for today, what have we got? Nothing. Again, the market's going to have to make its own direction. The geopolitical arena has gone very, very quiet with Ukraine and Russia. So again, the market's free to move to the upside, although it comes with a caveat which we'll look at in just a moment. Gold-silver ratio moving to the downside there at the moment, down 85, continuing its move and decline on the downside there. Let's kick off, have a look at the Dow, see what happened during yesterday's trading session. So yesterday we see another move to the upside. The market's been moving now for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. We've got 10 green bars there. And let's just have a look and see how many points the market's put on over the last 10 trading sessions there. 3,249 for the Dow. This is a massive move to the upside, coming off that 89% retracement there, stopping at the 78 retracement there at the moment. So the market due for a bit of a breather by the looks of things, come back to the 5-bar moving average. So I would be inclined to draw in some fibs off this one from here to yesterday's high, and the 38 ties in more or less with the 38% retracement there. I'm not saying it's going to sell off, but it's due for a bit of a correction after 3,200 points on the upside there. There you can see yesterday's move in all of its glory as well. Let's just have a look from the open. So from the open to close, we had 568 points. Quite a quiet day really for the Dow when you've seen 1,000 points move in this market. But nonetheless, the high is left behind. The market needs to take this out. As I said yesterday, as soon as you get through the high, the market will gun for it. And you see there how it drove through with massive volume. That's the way you get through the high and resistance. But it's looking a bit weakish overnight, now struggling with the close. Watch the DP level if the futures open lower in the DAX at 7 a.m. and the 50 EMA also. In this chart, let's have a look. We've got from here up to here. You can see that the 89 is going to tie in just around above this low, and you can keep drawing these in as the market moves lower, but to be honest with you, DP 50 EMA is the area to watch in this one. And also, if it's going to continue higher, it needs to get through yesterday's high. In the DAX, moving strongly to the upside also. So let's have a look, see how far the market's moved in this recent up move where the market retraced. Can't include the current bar in the daily chart, but can in the intraday. But intraday we're up over 1,000 points now in the German DAX as well, which is a big move, a significant move there. So again, watch the 78, the 89 on the upside. Let's go down to the 30-minute chart. Yesterday we saw the market move strongly in the afternoon. We moved down in the morning. Let's just have a quick look at this. And the market up 313 points, so a big 500 point swing there, 200 down, 300 up to the close of the Dow. Overnight, again, you can see we're close to the high. We're within, if I just switch tools for a second and move from this high down to this low, you'll see we came up to 89% on the overnight. and we're now making our way down. The high, very important. We're above that 13,000 level, which is really important as well. Market's just trading at the 50 level there. This is the 13,000 level there, which ties in with the 50 EMA, and you've got the close for support there as well. So you could see a bounce off this area. It'll need to drive through this and the DP if it is to head south. But there's a lot of support in this area, as you can see there. So let me just get rid of this and draw some targets on the downside as well in the 30-minute chart. Again, you've got 78, 89, the close, and the 50 EMA if the market does trade down to this level. And of course, if we trade down to that level as well, we are looking at the 13,000. So we have a lot at the 13,000 level in the German DAX if prices move down to this point. Overnight, you can see how the 5-minute has gapped and moved higher. And yesterday, a bit more detail of what the market was doing. It was sideways with the futures, and then eventually it broke to the downside, as you can see there. Before in the afternoon we moved back to the upside, that 300 odd points in the US trading session there. In the S&P, also trading at the 89%, got through the 50 EMA yesterday, sitting on that as support on the overnight. Again, these are targets for the downside should the market move down for today. Yesterday you can see that we were down lower to begin with, down to the DP. We had the low as well from the previous day. No, that's not the low from the previous day. That's the new low. That's today's target on the downside, which is yesterday's low. But we had the 89% retracement before the market moved higher. Down quite a bit on the overnight. The high from yesterday is up here. So we're sort of midway between the high and low on the DAX. In the FTSE 100 sideways, expected a bigger move off this with Rishi being elected. Maybe they're not happy with him because, let's face it, he destroyed the economy single-handedly before when he was Chancellor. So maybe that's the reason. But only time will tell, of course, and I wouldn't be surprised if we don't end up with a general election as the sentiment changes after the half-term holidays which we're going through this week, which is why the market's another reason why the market's bullish. A lot of traders away. So again, that's why you're seeing prices moving to the upside on a daily basis and taking out the previous day's high. Downside targets, just in case we get something out of nowhere, a black swan event, these would be the downside targets. 30 minutes of the FTSE, well, it sold off to begin with, down to the 200 MA, down to the S1, down to the BRN, and then the market traded off it. A bit like the S&P, the market is coming off the high. It's a third off the high at the moment and 2/3 off the low. But again, you've got some psychological levels here. This one, you've got the 7,000 major area, 50, 20, and just below this you've got the DP as well, which is an area where the market could bounce from. In the currencies, GBP, JPY still on the upside as the dollar has taken a bit of a hit during yesterday. In the 30-minute GBP, you can see the market moving higher there, but sideways overnight, trading at yesterday's high. Dollar finding a bit of support overnight. Meanwhile, the pound moving very strong to the upside yesterday, taking out the 50 EMA, and the market sitting on this overnight with support for this area. Again, this was based on, well, they're saying that the pound is at 6 weeks high, and it's down to Rishi Sunak, which it's not. To be honest with you, this was because the US dollar moved lower yesterday afternoon. If this had been anything to do with Rishi, it would have gone up first thing. It's not. This is because the US dollar moved lower. Market sitting on the close of yesterday. Got yesterday's high there. I'll be watching this area, but you need to look at the dollar index, which we'll do now. So let's just have a look at the dollar. You can see this moving sharply lower yesterday, trading down to the 50 EMA. We've got the 89 there and the confluence of the three indicators there, and we're oversold as well. So the market finding a bit of support there. And you tend to see the dollar drop before the US raise rates as well, which we'll see next month. 30-minute chart, there's the drop off there, massive drop all of a sudden out of nowhere on this Operation Twist rumour. They're going to go back to QE, they're going to stop raising rates. We've had this all week, when the reality is they're going to still have to continue to raise rates, aren't they, until at least December or January. So the dollar down there. This was good news for the metals. Silver rallying back up on the overnight as well, which means it's likely to move lower during today. That tends to be the picture. Yesterday it was down to the 200 MA, oversold, and then moved up, and then overnight we've taken out yesterday's high. So far, gold not moving as much sideways as can be seen here in the 30-minute charts. We're bouncing off the DP and the BRN there. The price of the bounce at the BRN is 1650 and continuing to move, but not as much as silver, which is why you see the gold-silver ratio dropping down a bit. So there we go. There's a quick roundup of what's happening today. We're midweek. It's still half term. Markets are quiet and moving to the upside based on the rumours, not on the facts, which is no surprise for the half term week. The reality will return at some point, but at the moment, it's the market's just moving higher, as we've seen. 3,200 points for the Dow and over 1,000 points now for the German DAX, but approaching areas where we've got fibs and the market being overbought. Okay, that's it for this one. If there is anything major to report, I'll let you know, but otherwise, as ever, thanks for watching. See you in the next one.